Maybe as a first question, as we're starting the new year 2014, how are you and your organization thinking about investment opportunities across the world, and where do you see the most attractive opportunities coming?
Let me begin by saying our program being relatively new, we are really not focused on trying to find the best opportunities today. What we're trying to do is implement something that we set out a few years ago. And it so happens that we actually find a lot of value, we think, at this point of time in Asia, given what's happened in the last 2 or 3 years in the Asian side of the world. We actually think it's a good time to be investing in Asia, and hence have been trying to come to Asia. I guess this is our third visit in the last 12 months, trying to figure out what's the right thing for us to do in Asia and make investments. So we're actually very, very positive. And it's the long-term demographics of this area that continue to still interest us. What happened in the last 2-3 years happened in the US in 2008-9. So we expect these kinds of aberrations to happen, but not long-term basis.
Asia, of course, is a very large geographical area. Are you particularly focused on emerging Asia, or do you also consider the more developed Asian economies?
Once again, relative to where our program is, our focus is going to be more the pan-Asian or the regional Asian managers. And one of the drawbacks, apart from all the other positives that managers like that bring to our small program, is the fact that then you do get exposed to some of the countries and geographies that you don't necessarily want to. And when you say developed Asia, I'm assuming you're talking about Korea, Japan, but I also add Australia to that. Canada being very similar to an Australian commodity-based economy. Personally, we don't think we would invest in Australia on a straight country basis, but if it is part of a pan-Asian relationship, we'd be okay with that.
Okay. And as you consider Asian or pan-Asian fund managers, what are some of the unique risks that you try to assess, some of the challenges for those managers, and in your diligence, some of the focus areas that you focus on specifically regarding these Asian managers?
So I think if you go back and see, private equity is about IRR multiple and cash realized, and in Asia we start the other way around and saying cash realized being the number one, given that we've been in the business now, call it about a decade. Some firms have been around for 20 years, so obviously those firms are the ones that you would tend to look at. But looking at cash realization is the number one thing that we are doing in terms of performance and track record. The second is obviously the team stability, and Sebastiaan, you and I have discussed that elsewhere too. Finding team stability is of very, very high importance in this market. The third is also the breadth of the team that covers the pan-Asian managers. As you commented, Asia is very wide and big. It's bigger than America. Flying 5 hours LA to New York seems like a joke in front of what you need to fly to get to Sydney from Hong Kong. And if managers are doing that. So apart from team stability is the depth of the team in these geographies. Once again, the cliche is culturally every country is so different out here, more so in Asia. How are these managers managing the eclectic group of partners that represent different cultures, economies, time zones to get a deal done in Asia are important considerations when we look at how they actually execute stuff.
How do you think about currency risk in the context of an Asian investment, given that there's clearly been a fair bit of volatility in the currency movements here?
Now, once again, I cannot sit here and say I have a magic wand that will tell me which countries are going to depreciate, and I would stay out of it, especially when I'm going to do pan-Asian managers. We are always going to have, and I can talk about an Indian rupee because that's my home country where I lived for the longest of my time. Rupee depreciates slowly, and then every 5-10 years goes for a big wang, and then stabilizes and will go down 2-3% and then goes down. You can't really manage to those situations because you don't know which year the whack is going to come in. But then do you eliminate the countries with current account deficits altogether? Not really, again, because so we are benchmarking ourselves on a local index and do take the currency risk in our books. But once again, if you want to be exposed to Asia, given its other characteristics, you will have to learn to deal with the currency situation. I don't think it's an issue of trying to find a hedge and put one and try and eliminate that risk. It doesn't exist in my mind.
Yeah.
The risk exists, the hedge doesn't exist. Sorry.
Yeah, I think that's a fair point. Well, Rakesh, I want to thank you for your very candid and insightful answers. It's been very pleasant talking to you, so thanks again.
Thank you, Sebastiaan.